The yen is gaining because a ceasefire extension changed how investors are pricing safety, oil risk, and dollar demand all at once. The pressure point is simple. A ceasefire extension is changing safe haven flows and putting the yen back in charge. Japanese yen soars is the search phrase, but the story becomes clearer once the mechanism underneath the headline is visible. That is why traders keep repricing the same headline through multiple markets at once. The move is tied to an extended U.S. Iran ceasefire, which eased immediate supply shock fears and pushed capital toward classic safe haven assets such as the Japanese yen. That matters because macro pricing starts before a confirmed shock. Markets revalue the probability of disruption long before disruption is visible. This sets the first macro anchor before momentum traders and policy watchers add their own reactions. USD JPY reportedly broke below key support levels as traders reassessed volatility, energy pressure, and the need to stay parked in dollar-denominated risk positions. In easy English, a risk premium is the extra price traders pay because the future looks harder to estimate. At this stage, technicals and macro are reinforcing each other rather than pulling apart. For people typing Japanese yen soars, the market signal matters because it feeds into broader dollar, liquidity, or risk conditions. The story also points to knock-on effects for Japanese exporters, government bonds, and broader Asian currency dynamics, because a stronger yen changes relative competitiveness across the region. That is the part that starts to spill into broader liquidity conditions. The mechanism is flow rotation. When geopolitical stress shifts from escalation risk to a more durable de-escalation story, investors rebalance across currencies, bonds, and commodities rather than reacting through one market alone. For people searching KW, the immediate crypto link is through the dollar, energy, safe haven flows, and the broader appetite for risk. Once the mechanism is visible, the move stops looking random and starts looking systemic. For crypto markets, that matters because safe haven demand, oil pricing, and dollar conditions all feed into the global appetite for speculative exposure. If capital becomes more defensive or more selective, crypto feels it through liquidity and risk sentiment. When oil, currencies, and bond expectations start shifting together, crypto does not trade in a vacuum no matter how strong one token narrative looks. This is why risk assets often feel the change, even when they are not the market named in the headline. What is still uncertain is how durable the ceasefire really is. If markets later decide the calm is fragile, the flow pattern can reverse just as quickly as it formed. Watch yen's strength against the dollar, watch oil's response, and watch whether the Bank of Japan starts sounding more alert to currency moves if appreciation begins to threaten the export story. The unresolved piece matters because macro reversals often begin with an argument about durability. That leaves Japanese yen soars tied to the next macro confirmation, because one session move never settles a bigger liquidity story by itself. In a market that keeps repricing conflict and de-escalation by the hour, macro does not sit beside crypto. It keeps shaping the ground crypto trades on. The next confirmation will come from follow-through across linked markets, not one isolated print.